Today, we're going to talk about Forex and crypto and the relationships between the two. It really matters. My focus is helping you to decode financial markets. Financial markets are incredibly complex. My goal is to maximize your understanding. Hi everyone, I'm Ken from CryptoTradingKS. If you're new, a very warm welcome and welcome back CTKS family. Here you'll learn how to become fearless inside financial markets, to assist you to become more of a financial and emotional blessing to yourself and those you love. If you like the content, please subscribe to the channel and don't forget to smash that like button. All the indicators that I use on the daily video come from the service inside ctksmethod.org. Let's run the numbers. There are very strong linkages between Forex and crypto. You don't need to trade Forex to trade crypto, of course, but there are very strong linkages that you'll need to understand. And if you're a Forex trader, understanding crypto can be fantastic. It will give you another way to create signals. When it comes to Forex, it's incredibly important to understand the role of the US dollar. The US dollar has global reserve currency status. According to the IMF, the International Monetary Fund, nearly 60% of global foreign exchange reserves are kept in US dollars. According to the latest IMF official statistics, you can see allocated reserves for the US dollar are really large, followed by the euro. As of Q3 2022, 59.17% of world foreign exchange reserves were held in US dollars or US denominated debt. When we consider that there's $6.5 trillion of foreign exchange reserves, the US dollar's dominance is really strong. You can see the euro coming in at 19.58% and the yuan at around 2.37%. The reason that so many governments hold so much foreign debt in terms of US dollars has a lot to do with GDP, and we can see GDP over the last 2,000 years has gone exponential. This is mainly due to the pace of invention and innovation. The US, in terms of GDP, is the world's largest economy. From the 2021 data, it was 23.32 trillion US dollars. The United States' lead and focus on invention and innovation comes through its companies. When looking at the largest 10 corporations around the planet, 9 of those are from the USA. The largest corporations in the world keep on growing, and of course, people want a part of those companies. They want to invest in the shares of those US firms. Therefore, it should be little wonder that the US's share of world stock market volume is 58.4% as of January 2023. The next leading economy is Japan at 6.3%, the UK 4.1%, China 3.7%. To buy the stocks of US companies, people require US dollars. Other commodities such as gold are priced in USD. The dominance of the United States has led to other commodities being priced in USD, such as oil. And of course, crypto is primarily referred to as a base of US dollars, Bitcoin, USD, and of course, cryptos in general. It's no wonder, given the preceding factors, that 11 out of the top currency pairs globally are paired to the USD. In the financial media, you'll often see the USD or the US dollar referred to as a safe haven currency, and you can see why. When there's a flight to safety or things are looking a little bit uncertain, safe havens become very important. We often see this in terms of crashes. People put their money into cash, primarily the US dollar. So as the USD spikes up in times of economic uncertainty, that's not a good thing. That's why another reason we need to keep our eye on the USD via the DXY, the US dollar currency index. The US dollar's supremacy has often been questioned. De-dollarization refers to countries reducing their reliance on the US dollar as a reserve currency. These are typically countries at odds with US government policy. You may have also heard about petrodollars. Petrodollars are dollars paid to oil-producing countries for their exports. Many oil-producing nations are at odds with US government policy, and they've been seeking to reduce their reliance on USD because the government can use US dollars for sanctions. You can see that Forex is a really big area. If you have any other questions or you'd like to make any comments, please let me know what's on your mind. Inside the service, we cover the structural levels on the DXY, the dollar yen, the euro dollar, and the Aussie dollar. Let's have a look at those now. We can see the DXY has been trading for quite a long time, since 1967, in excess of 20,797 days. When it comes to looking at support and resistance on the DXY, if you take recent indicative price, you'll get one kind of version of where price support and resistance is. A lot of people also like to apply moving averages. Here is the 200, the 100, and the 50-day moving average. Moving averages are very lagging indicators, and you can see they only follow price. They can't predict when price is going to reverse, and this is the biggest issue with moving averages. That's reverse to the upside or to the downside. For example, when you look at a moving average, a 200-day or 200-period moving average is literally the average of the preceding 200 periods and just averaged at that point in time. That's that really thick white line. When you look at the 200-period moving average, which is a 200-day moving average in this specific case, it's more likely to give you a trend indicator than anything else. Let's just zoom in to recent price action to understand what's cooking with the DXY. As a former lecturer in first and second year statistics, I'm really fond of averages, measures of central tendency, dispersions such as Bollinger Bands, which are standard deviations. I like the mathematical measures, but there's one thing that you need to keep in mind. This moving average cannot tell you where the structural resistance and structural support levels are inside the market. When you look at this particular price action, let's in fact look at that. Let's just zoom in a little bit here and look at what is happening right now. Let's also just look at this specific area on the DXY, and we can see this is a daily basis. Let's pop on the indicator from the service. What does this tell us? It tells us that there was a lot of structural resistance at that 102.5310 mark. Look how price came up, or the DXY came up, challenged it, 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 and finally broke through. A moving average cannot give you this level of granularity inside the market. It also can't tell you where structural support is, as the DXY was breaking down from here. This area of structural support caught price and rebounded it. Where did it rebound it to? You got it up to structural resistance. What is happening with the DXY right at the moment? People think that the DXY 200-period moving average, 200-day moving average in this case, represents some incredible level of resistance. In fact, the level of resistance was not up there at all around that 103.4428 mark. It was down here at 102.5287. The 200-day moving average is supposed to be very, very strong structural, either support or resistance, depending on which side price is. You will find that it is typically not structurally sound. Also, if you would like to look through the history of golden crosses and death crosses, you will see that they typically move opposite to what is stated. For example, a death cross typically moves up when that occurs, and the golden cross typically moves down in the days after it triggers. The key is that these are very long-term averages. Now, what does the DXY crossing through this high area of structural resistance mean for the market? Well, it doesn't mean it's good for the market. People are currently doing a flight to safety. The key is to always seek to understand where the DXY could be going, because as the DXY goes, stocks go typically opposite. Not all the time. Sometimes stocks move in alignment with the DXY, but that's under specific conditions. What we use the euro dollar for is an inverse measure. Right now, we're seeing the euro dollar is following the normalized negative price path. Normalized price paths do not seek to predict price action. They seek to understand where structural support and resistance levels would play out at the start of the month. And they don't seek to look at price and what it's doing. They seek to estimate end-of-month targets. For those people inside the service, you've already seen that the euro dollar was marked up from the start of the month, and these paths are not changed. What it means is if the euro dollar is flowing through the negative price path, this is what we would expect the markets to reflect. That specifically means if we see the euro dollar starting to decay, we expect that the DXY is going for it. It's going up substantially. We need to understand where the structural levels are on the euro dollar. Let's zoom in a little bit more on price to see where the euro dollar could be under resistance or becoming into support. Looking at the euro dollar and popping on the indicator from inside the service, we can see that these safety nets are getting actioned. As you go through more and more safety nets, especially if that's a big sell-off, you would expect price to just slow down and rebound. And we can see that we've got good structural support levels at 108.42 and down a little bit lower at 108.37. We've got minor support areas inside the market as well. And we've got a reasonable structural resistance level at 109.02. This means that the euro dollar is coming into support. That means that we would also expect to see the DXY. It could spike up for a little bit and then start to encounter resistance as the euro dollar encounters support. When looking at the dollar-yen combination, which has been trading since 1971, literally 19,300 days worth of data, what we can see is the dollar-yen combination is coming up and it's been doing really well. But we're going to zoom into here to determine where structural support and resistance levels are. We can see that dollar yen has been doing well, as has the DXY, and this is exactly what we would expect to occur. When we pop on the indicator, we can see that there's a very strong structural level of resistance through that 147 and 26 mark. Literally, we've had a couple of positive fresh air gaps, and that's exactly why dollar yen has exploded upwards. As soon as it got over this resistance, and you can think back to the DXY resistance as well. The DXY was breaking through resistance. Dollar yen was breaking through resistance. Dollar yen came into some fresh air gaps where price moved up very, very quickly. But what happened as soon as it encountered a structural resistance at 146.60, it started to just go sideways. And that's what we would anticipate with this structural resistance. Another fresh air gap, managed to get above it and challenge this upper structural level. And it's starting to flatline again. When you get a confluence of very heavy structural resistance lines, that's where all the sellers are coming in to stop price dead in its tracks. And that's exactly what it's done. And these particular lines are drawn out with level 1 and level 2 standard certification. They're drawn out so that you can figure out where the guide rails inside the charts actually are. The dollar yen has been on a rampage recently, as has the DXY. Inside the service, the upper boundaries on dollar yen will be released. The euro dollar and the Aussie dollar tend to move pretty much in lockstep, and we can see the Aussie dollar is below its negative normalized price path. Normalization is all about how structure interacts with price, and we can see it's a long way below the normalized price path right now. You got it, I cannot do tongue twisters. Zooming in on the Aussie dollar, one thing that you note is price is behaving in a very specific way, and when you have the Aussie dollar indicator from the service, you can see exactly the way it's indicating. When the Aussie dollar fell through this structural support, it got caught at the next safety net. When it had a bit of a negative fresh air gap, it got caught, tried to reclaim it, and now has moved towards the negative price path. Understanding where structural support is as price is coming down is incredibly important. If you have negative fresh air gaps, remember dollar yen had positive fresh air gaps. If you have negative fresh air gaps, that's meaning that price can move down quickly. The next structural support line on the Aussie dollar is at 65.65. The Aussie dollar is currently trading at 65.79. And the lower boundaries of the Aussie dollar have been released into the service as well as dollar yen upper boundaries. Here I've inverted the DXY across Bitcoin's price path. What we can see right now is the DXY is signifying for negative price momentum to enter the crypto market. One thing to always be aware, this is just a probability. Not every time the DXY is the inverse of Bitcoin. But it does help us to understand what is going on. For example, if you were trading a gold or tokenized gold through crypto, such as PAXG, you would understand that the DXY, its ascent up, the dollar yen combination and the decay of the euro dollar and the Aussie dollar means that yields are increasing, and the yields and the DXY increasing will crush gold and silver. Therefore, it's really important to know if you're a commodities trader. Bitcoin also typically moves inversely to the DXY, and here is this inversion that I put out. If I uninvert the scale, you can see what the DXY normally looks like. And what we're seeing right now is a bit of a crossover in the DXY. This could lead to weakness inside the crypto market, just something that you need to bear in mind. We love volatility inside crypto. When crypto sells off, we're all in and more. Only kidding. We're never all in, ever. But the concept is we buy in levels and layers down, expecting that the bull run will add so much significant value to crypto, and it will. But crypto cannot escape the stock market's gravity or Forex's gravity. It also can't escape the gravity of yields. Looking at the euro dollar overlaid against Bitcoin, you can see that it doesn't always follow path, but it does give some indication of a potential probability as to where price could be going. Inside the crypto market, as it's such an incredibly small market, you can have internal events that cause big problems, and that's what we saw down here in November. But the key is, when you get a crossover just like this, you would expect positive momentum inside the crypto market, and that's what's been occurring recently. One thing to always note, when you're looking for certainty relationships, and that just means that you must have 100% certainty that if the euro dollar goes down, Bitcoin and crypto will also go down. You'll be sadly disappointed. You need to collect probabilities. You only need to be certain as to what you will do if price goes for you, goes nowhere, or goes against you. When looking at the Aussie dollar versus Bitcoin, we can see the directional correlation playing in. So what is the Aussie dollar telling us right now? Be aware that the crypto market could be probabilistically in for some retracement. That doesn't mean it's going to happen straight away. In fact, there are plenty of observances where the Aussie dollar goes down, but crypto goes up. So just be aware of this. When you're searching for probabilities and not certainty, what it will do is to help you to understand that when the Aussie dollar comes down, you're likely to get negative price momentum inside crypto. And when it starts to turn around, you're likely to get positive momentum inside crypto. But don't expect it to happen in that second. This is why adopting a professional mindset is so important. Just throw certainty out the window and embrace probability. How reasonable is the DXY in predicting where the price of Bitcoin and crypto could go? It gives a fairly reasonable directional association. And note here, I've inverted the price scale as well. This is what it looks like uninverted. I want specifically to zoom into this particular area. When we look at this area where Bitcoin and crypto just melted down, as did the stock market, look at what the DXY did. It went parabolic. But of course, as things started to come down, that money got taken out from cash and put back into the markets. It's important to zoom out sometimes and just get a feeling as to if the market conditions are changing or not, because, hint, hint, the market is always changing. We can see just recently the DXY has started to come up, but directionally, crypto is also coming up. Ken, what explains this? There's a reason. And the reason is always the same. It's a structural reason. I was explaining that there is really good structure. If you have the indicator, you turn it on and draw in this SC. The SCs don't come, Stanfield zones don't come as part of the indicator. What we notice is that this particular area of structural support acted exactly as structural support. It pushed the price of Bitcoin, and therefore the entire crypto market is trying to come up to the next bounce level, which is 43,628 to 44,020. This structural support is the reason that the DXY has not had an immediate impact on crypto. You'll find it's always a structural reason. For example, why did dollar yen just go parabolic? Structural fresh air gaps, 2 of them. You'll find more and more it is always a structural reason. Bitcoin is currently trading at 43,376. One thing to bear in mind as well, total crypto market cap is just inside its structural area. If it gets above where it is literally right now, $1.663 trillion, we would expect a big rally up, and we can get these big long spikes. We've seen them, and with crypto they can reverse in 24 hours, so just be aware of that. Right now, as the markets are uncertain, it's absolutely critical that you know the structural support and structural resistance levels. If you don't, you do not know where price can fall down through. Weak structural support to reach stronger structural support. You won't know where the positive fresh air gaps are, like dollar yen. And these, of course, apply to any price chart. If you would like to learn how to mark up your charts with the CTKS Level 1 and Level 2 standard certification, you can find it on ctksmethod.org or the service as well to get the structural levels already marked up for you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.